You're welcome to today's episode of The Human Angle. Happy New Week. The development of any nation depends on the amount of revenue generated by the government for the provision of infrastructural facilities, with taxation being the key to unlocking the resources required for public investment and infrastructure growth. Taxation and the management of tax is a stressful activity for everyone, especially for business owners and entrepreneurs. And if you're selling taxable goods or services, or you earn some income from working, you're almost always likely to have tax obligations. Now, this means that you are legally required to collect, file, and remit sales and use tax. Therefore, this week on the program, we'll be discussing tax as it relates to you. And on today's episode, we'll be looking at an overview of tax, its importance, the various types, rates, and its history in the country. So first, what's tax? A tax is money that a government collects within its borders in order to pay for everything that it does. It's a compulsory contribution to state revenue levied by the government on workers' income and business profits, or added to the cost of some goods, services, and transactions. Simply put, it's a sum of money demanded by a government for its support or for specific facilities or services levied upon incomes, property sales, and so on. Now, we work for money or an income, and then the government takes a portion of this as a tax. So why do we pay this tax? In the smallest of nutshells, taxes are paid because the state or federal government implements tax laws. Now, taxpayers' money pays for the government services of all kinds, and although taxes are considered as a legal requirement, paying taxes is also considered as a civic duty. So if you neglect to pay, the mediating body that oversees taxes, that is the Federal Inland Revenue Service, would require that you do so. Otherwise, you might face penalties such as large fines or even jail term. Now, in 2015, the federal government of Nigeria collected over 3.7 trillion naira in taxes, and this would come from several sources such as personal income tax, payroll tax, corporate tax, tariffs, and many more. The government requires these funds to release its numerous responsibilities for the development of the country, the betterment of society as a whole, and other non-developmental but essential obligations to the citizens of the country, such as you and I. Now, tax is an important aspect of your compliance obligations and your business if you're engaged in one. Therefore, a key understanding of tax management that operates in your area of operation is very important. But before I go into the types as it relates to you, let's quickly take a look at how taxation started in Nigeria, our country. Now, the history of taxation in Nigeria dates back to even before the name Nigeria was coined. During this time, the tax administrators then were the traditional chief tax agents, and at this time it was mostly farm produce and other primary goods. Then the modern taxing system by the federal government of Nigeria under its taxation Federal Board of Inland Revenue, however, can be traced back to the year 1939 when the Companies Income Tax Ordinance was created. After the creation of this first taxation body, it has always changed actually, and in response to the changes made to the tax law are caused by several other factors. And then in 1978, the Task Force on and Tax Administration under the leadership of Alhaji Shehu Musa formed the Federal Inland Revenue Service as the operational arm of Federal Board of Inland Revenue. Taxes in Nigeria are in two categories: the federal taxes and then the state taxes. The federal taxes include companies income tax, value-added tax, education tax, and so on, while state taxes on the other hand include personal income tax, business premises tax, development levy, etc. As an individual or business owner in Nigeria, these different taxes are relevant to you or your business, and you should be aware of them as you're liable to the payment of any tax. And if you fail to pay it, ignorance of the law cannot be used as a genuine excuse for such an act of omission. Therefore, I'll try to do some justice now, explaining the common types briefly so that at least you can have a basic understanding of them as it relates to you. So first, let's look at the Companies Income Tax, that is the CIT. The Companies Income Tax Act is a common tax type for companies in the country, and under this act, you have to pay the company's income tax if you are a resident or non-resident company incorporated in Nigeria. Secondly, we have the petroleum profit tax, that's the PPT. This petroleum profit tax is subject to any resident company or person in charge of a non-resident company who is exploring for petroleum or producing it in Nigeria. And then thirdly, we have the value added tax, that is the VAT or the VAT. I'm sure you heard of this before. Now for the VAT, any person or individual, corporate, sole organizations who consumes or buys any taxable product or service will have to pay this tax levy in Nigeria. Now this practically applies to everyone, as we all engage in the buying and consumption of goods and services. The fourth type we'll look at is the personal income tax, the PIT. Now, the personal income tax is the most common tax type in the country. A personal income tax is a tax imposed on individuals or entities, that is, we the taxpayers, that varies with the respective income or profits, which is the taxable income. Now, the personal income tax generally is computed as the product of a tax rate times the taxable income. Also, there's the withholding tax, that's the WHT. Withholding tax deductions are regarded as advance payments or payments on account of the relevant tax liability that would arise from the tax returns of the period concerned. And then we also have stamp duties. You must have heard of this as well. Now, items or persons subject to stamp duty tax are written documents relating things between individuals or companies or group of souls. Stamp duties may include instruments such as financial transaction, articles of association between companies, statements, deals, bonds, and so on. And then we have the capital gains tax, that is the CGT. All the companies registered in Nigeria which earn any capital gains are liable to the capital gains tax. Now, the capital gains tax is calculated and submitted with companies' income tax to FIRS through the designated bank. The fact is, the administration of tax is vested in various tax authorities depending on the type of tax under consideration. Now, in Nigeria, there are three authorities, namely the Federal Board of Inland Revenue, the State Inland Revenue Board, and then we have the local government revenue authorities. The federal government collects taxes through the Federal Board of Inland Revenue, and the agency administers revenue laws that deal with taxes paid by the residents of the Federal Capital Territory, and then taxes are paid by corporate bodies, that is, limited liability companies. Now, they're also responsible for accounting for the federal government for all taxes collected. For the State Inland Revenue Board, the state governments collect taxes through them, and then the agency primarily administers the Personal Income Tax Act. However, some states of the Federation have instituted additional revenue statutes, which they also administer. Now, they're also responsible for accounting to the state government for all revenues collected. And then under the local government revenue authorities, the local government collects taxes through the committee, the revenue committee, and they are responsible for the assessment and collection of all taxes, fines, and rates under their jurisdiction. They also account for all revenues collected to the chairman of the local governments. In the country, not all naira earned are equal so far as the taxman is concerned. So tax rates vary according to the amount of income you earn, and you pay different rates on different portions of your income. For corporate tax, companies pay 30% of their worldwide profit, while foreign companies pay 30% of only the profit made in Nigeria. The educational charge is pegged at 2% of the accessible profit, while a 10% withholding tax is deducted from dividend payments to companies and individuals. For individual tax, Nigerians, such as you and I under the law, are to pay 25% of their total worldwide income, while foreign individuals are to pay 25% of the profits made in Nigeria only. Also, every citizen of Nigeria working with the government, the private sector, or owns a business in operation or has an intent, if you have an intent to start one, is expected to obtain a tax identification number, that is the TIN. The TIN is a unique number issued and allocated to you and I, or companies, to identify us as registered taxpayers in Nigeria, and must be fitted out on return statements and other tax-related documents. All taxable persons or businesses are required to also prepare and submit annual self-assessment tax returns within 90 days from the commencement of every year and include the amount of tax payable. And then for each year of assessment, you're also required to file a return of income with the relevant tax authority where you or the business is deemed to be resident. And that'll be all for this edition of the Human Angle. Join us tomorrow as we'll be looking into income tax and you in detail. If you have questions or comments, kindly send a mail to programs@proshareng.com and business@proshareng.com. We'll be glad to hear from you. Visit our website www.proshareng.com to get more information on your personal finance and updates for my news stories and videos. Also follow us on our social media platforms shown on the screen for further updates on our market reports. See you tomorrow when I come your way again. Thank you for watching and bye for now.